Hello, traders. Welcome back to Your Nifty Guy. A new week, a fresh trading opportunity. Mondays often set the tone for the week, and how we prepare today can decide how confidently we trade the coming days. Remember, markets don't reward impatience, they reward preparation and discipline. In today's video, we'll break down what the charts are telling us, key levels to watch out for on Nifty, and how we can position ourselves smartly for Monday's session. And before we begin, if you find value in these trade plans, don't forget to hit the like button, share this video with your trading circles, and subscribe to the channel so you never miss an update. Also, drop your thoughts in the comments. I would love to hear your market views. And on that note, we'll start with today's video. And as usual, the video will be divided into two parts. First, we'll be discussing about what we had planned for Friday versus what happened, how did we play it out, and then we'll be focusing on the plan of action for Monday. Right. So on Friday, the markets opened with a gap up almost very close to our resistance area. Now, this resistance area is nothing but the high and low of the previous trading session, which was marked. Now, like I always tell you guys, you have to build a story around Nifty and how the price action is reading, how the charts are forming, and then so this is just the point 0.5 to 0.618 zone, which I mark on my charts, which I feel is one of the most important levels. But then does not mean that the price will come here and reverse, right? So even 0.382 levels to zero point 0.5 level is also an important zone. 0.236 to 0.382, all these are fib levels. Now I pay more attention to this particular level, but that does not mean that markets cannot reverse before touching it, or market has to touch it and only then reverse. So this is just a retracement. Fib is a retracement tool, and markets can very well reverse from lower levels as well. What we need to consider, why I don't like to keep so many levels on the chart, is because it creates a confusion, and that is the reason why I just mark this particular zone and mentally I know, okay, this is the zero point 0.5 level, this is the 0.612 level, and anything below these is the 0.382, 0.286 level. So again, markets took a markets gave a very strong bullish candle at the start of the day, fell down, broke down below that low, again gave a pullback. Now, if you look and feel closely up, if you see, consider this as a with the gap up, this is a double top happening from a resistance area. Even if it is from below that, as I told, not market need not exactly touch the point, but you have to try to understand what exactly is happening. The gap up that we saw, some buying did come in, but then that buying was not sustaining, right? In case if that had to sustain, this particular high had to be taken out, and once above these levels, we could have created a long entry as we had planned. But because a double top was in the formation, I shorted the markets as soon as this particular swing low broke down in this particular candle, with the SL being right above this particular swing. Now, why I always tell you guys to keep an SL at a very logical point is quite proven right here. So just right after my entry, immediately my position went into some loss. But it did not hit my stop loss. And that was the reason I held on to the trades. And as you can see, the fall that came into the markets immediately after that. Had I exited just by seeing these two green candles, I would not have been able to capitalize on this move, and I would have actually booked a loss in a position which gave me good profits, right? Now, the logic behind it is until unless before you enter a trade, right? When this particular pullback did come in, I knew that okay, if market is going way above this, I will be taking and planning for a long position. But if market is going to break this particular swing, I am in for a short position with this swing around here being my stop loss, right? So the stop loss has to be predefined before even you enter into the trades. And once you enter into the trade, it is either a stop loss for you or it is a target for you, right? Nothing in between, right? Just don't let two candles scare you because the market will move in waves, right? It is not gonna, okay, uh, you have entered a short, so I will immediately I have to fall from here. No, markets can give the pullbacks and retracements, but then again, you have to understand the wider scope of things that is going on, right? The gap up which the market opened was not sustaining, and that has been the story for past so many days. Market is opening with gap ups, but then again, those gap ups fail to sustain, right? And that was the reason this was the short which was initiated by me around here. And in this particular candle with the SL around here, then once this low particular broke down, I moved this around here, but then the markets gave a very good move. I waited till this good bullish candle formed around here. It showed some buying which is coming in, and as soon as this started continuing, this was here where I exited the trade. Right, I was in good profits and I did not want to risk it. And I always tell you guys something. So whenever markets will give you a move which is very, very quick, right? In a very short amount of time, you are getting a good risk to reward ratio and a good amount of profit in terms of the amount that you see on the screen. It is better to exit quickly, right? If you hold on. So once parabolic moves like this comes, it can be reversed with equal intensity, right? So that is the reason when I receive a good amount of profits in very small amount of time, as in very quickly after entering into my trade, that is where I try to book my positions very, very quickly. And this was a bullish candle. I waited for it to close, of course. And once this particular candle closed and this another candle started forming, this is where I exited this particular trade. Now, post this trade, I did not take any further trades. This was the only trade that I took. Now, there was another trade which was in the formation around here. We were already below the uh, 75-hour support level. This was a flag and pole after the breakdown. But then again, the momentum, I believe, was quite sluggish with RSI being extremely, extremely sideways. And that was the reason I did not enter into this position. And as you can see, the momentum was sluggish. Markets did form a new low around here, but then RSI did not form a new low, and ultimately it went up. But again, because the buying which came in was not from my point or my as per my plan of action, I did not participate in this up rally, right? I had a very good trade and I closed my day around this particular candle closing, this particular trade. When I closed this trade, that was the end of the trading day for me. And as it is, I have been telling you guys to reduce your trading activities, not look to overtrade because market is in on a bigger time frame, on a daily time frame, market is kind of stuck in this particular bigger range for now. So this is the resistance, this is the support, and market is stuck in this. So until unless we move above this or until we move below this particular uh, levels, we have to play it very, very carefully. So I hope the reasoning and the rationale behind the entry and everything is quite clear. In case of any doubts, please put it down in the comments. I will try my best to answer them. Now, we don't need this particular level because a new low has been created. We'll be deleting this. We don't even need the 75 minutes time frame level. It has also been tested. We don't even need this. Now, this is the weekly time frame, and as I had discussed in the last video as well, I was anticipating it to be a inside week. The black color candle signifies that it is inside the previous week's trading range, and that is the reason why we have been experiencing such huge volatility, wherein we are entirely in this particular range within this, and that is the reason we're not getting too good of trades as well. But then nonetheless, we have to wait for our setups, and whenever they come across, we have to make sure that we make full use of that. And that is why preparation and planning is so very extremely important, especially keeping into mind the volatility that we are into right now, right? Now, for Monday again, the plan of action has to be simple. Above this, we'll plan for a long entry. We are also above this trend line, and with a pullback, we can initiate a long trade. For a short trade, I will, yeah, this looks good. I will wait for markets to come down below here. Again, I will be keeping my trading activity very, very low. And before I proceed ahead with further scenarios and trade plans, another key point to keep out for is look out for is Monday now is the expiry minus 1 day. So Tuesday is the weekly expiry for Nifty currently, and Monday being expiry minus one, whoever is into Nifty and is trading into and using option buying as the mode of trading, please make sure to shift your trading to the next week's options. Do not trade in the current week of options. You might be paying a slightly higher premium for your entries, but then you will be doing yourself a favor by safeguarding your capital, right? So I hope uh, you will pay heed to it and not take trading as a get rich overnight scheme, and but take trading as a very, very serious business, and that is something which I believe is a business cost. You pay a slightly higher premium just to safeguard your capital against potential sideways move or maybe a drop in India VIX. And just because you are in the next week's option, you will not be facing a lot of time decay, and you can still get out of the position in profits or with a smaller loss if as compared to entering into the similar trades with the current week's options. Now, again, on a 75-minute time frame, if you look at the structure, this particular low is still holding, right? So as long as this particular low is uh, holding and we are moving up above these levels, I will look to create a long position. Of course, around here, I will again be very, very careful. And in case of any negative price action around these levels, I will be looking at taking a short entry. And in case of a long entry, which I will be taking in above these levels with a pullback, I will be looking at booking them around these levels or based on the price action which is forming. And I believe the best opening scenario will be a flat to a minor gap up opening, wherein we spend some time around here and then we break out above this. Then with the pullback, we'll get a very good trading day. In case of opening around here, I'll avoid trading in between this zone because this is zone which has also seen a fall, which has also seen a good amount of recovery, right? I believe we have retraced uh, from this high to this low. Yes, we have retraced much more than the 0.5 to 0.618 zone and then have given a closing around that levels as well. So yeah, the retracement and or the recovery which came in the second half in the market was pretty decent. And see, this is what is characteristic of a sideways market wherein you open high, you give a very good move on the downside, then you again move up and again, like I mentioned around here, markets closing one day near the day's high, the next day we are closing near day's low. Then post the next day we are closing near day's high again. Next day we are closing near day's low, right? So this is what is characteristics of a sideways market. So this is something where we need to safeguard our capital even more. So around in this zone, I will avoid any trading activity. Plus, definitely we'll be getting clearer direction once we are above this zone or we move down below this particular zone. Till then, we'll play it safe. We'll play the trades in smaller quantities, and I believe in trading, keeping your capital safeguarded is much more important than the profits that you make. So, yeah, that's it for today's trade plan for Monday. Remember, the market always gives opportunities. The key is to stay patient, stick to your levels, and trade with discipline. If you found this video helpful, make sure to like it, share it with your trading circle, and subscribe to Your Nifty Guy for daily trade insights. And don't forget to drop a comment below with your thoughts on your own levels for Monday. I'd love to discuss them with you, right? So trade safe, stay disciplined, and I will see you in the next video. Cheers, guys. Thank you so much for watching.